Good morning. It's time for one of our Shard Light Bites. This morning, I'm absolutely delighted to be joined by Benny Osei, who is one of our portfolio managers with LeifBridge. LeifBridge is a Shard fund that's specifically set up to cater for the needs of US expatriates working in Europe. But Benny and I have worked closely together on a number of issues, and last week, the pair of us had a fantastic discussion about SPACs. Now, I know what you're all wondering, what is a SPAC? Well, Benny, what exactly is a SPAC?
Yeah, thank you, Bill. So essentially, a SPAC is a shell company with no commercial operations that seeks to raise capital that it then uses to do a reverse merger with a commercial entity. Now, SPACs are essentially set up by a consortium of specialists so in specific different sector areas, and they will essentially come together and put together this special purpose acquisition vehicle to then essentially go out in the market and find a specific target. And each SPAC has different sort of set of criteria when it comes to the type of company that they want to go out in the market and purchase. And normally the company that they will purchase will be a company within the private market.
Okay, but what you're saying is that SPACs, special purpose acquisition corporations, are effectively companies that are launched with lots of money but no assets and no idea what these assets are going to be. Because being something of a financial market historian, I remember the famous case after the South Sea bubble, and don't make a joke that I was there to remember the 1690s, but there was a famous case where somebody launched a company on the basis of raising 2,000 guineas for a company whose purpose is yet unknown. And he immediately got the money and promptly absconded to France with it. Is that the way SPACs effectively operate?
Well, in those terms, yes, that's correct. That's the way that they operate. And essentially, the reason for which investors do give money to these SPACs, Bill, is because it's more about a vote of confidence in the sponsors and trusting the sponsor to know what they're doing, and essentially going out in the private market and identifying, opportunities that currently are not available in the public market.
Okay, so I mean, let's just talk through the way that operates, because there have been a number of SPAC surprises. I think one of the biggest ones is a company that set itself up to do one thing, looking at property, ended up buying space tugs or something like that.
Yeah.
But if we can just think about why is it that SPACs are now so successful, one of the things I've looked at is that the whole market has swung towards equity. Everybody wants to now buy equity because relative returns are so much higher than they are in the bond market. But if we actually look at the equity market, it has contracted dramatically in the last 15 years because of private equity companies taking companies private, but also companies buying back their own stock, which has been a significant amount of money. So suddenly you have these SPACs coming out as effectively public companies. So it's there as something to buy. What's the actual process by which a SPAC comes to market and makes the acquisitions?
Yeah. So essentially the process, it's kind of like it's a two-headed sword essentially, because with a SPAC there is an IPO that takes place, but then there's also a merger that takes place at the same time. So the SPAC entity gets set up by the sponsors, where essentially they raise capital through an investment bank. So there's still the classic traditional IPO component is still part of that. And then there you also have a pipe investor, normally that would be involved in some of these SPAC deals as well, where basically you will have private private companies making public investments essentially, and normally they get a bit of a sweeter deal than what the SPAC investors will, because essentially they are coming in at an earlier stage than what the SPAC public market investors will essentially do. Now, once the SPAC has been made public, and essentially goes onto the market following the IPO process, it essentially has around 18 to 24 months to find its target to then enter into an agreement with, to then purchase, or essentially reverse merge that company into the SPAC vehicle, at which point the ticker symbol of the SPAC will change to that of the actual company and then be listed on the respective exchange. Now, within that process, these companies still have to, so the SPAC itself still have to file an S1 filing. But the reason for which their popularity has grown so much is because it gives a lot of optionality for these private companies to go public. The traditional route and the direct listing have now significant competition with the SPACs, considering the fact that SPACs do not require, or at least from the side of the private entity that is going public, it doesn't require the same rigorous and kind of cumbersome IPO process anymore. So
but surely the whole IPO process is there to protect investors, to make sure that they're buying into something that is fully justified and meets all the requirements that the regulators have set down.
Yes, that is correct, and that's where essentially the investors are putting their faith and their dollars in the hands of the SPAC sponsors, because that job is essentially passed on from the investor to the SPAC sponsors instead.
Okay.
Now, yeah, go ahead, Bill.
One of the big criticisms that's been made of SPACs is that many of them seem to be forced to make acquisitions so they don't miss that 24-month window where they use or lose the cash. And we've also seen SPACs that look to have been rushed, and some of them appear to almost have been borderline fraudulent. That's one of the issues that has made people question SPACs. But of the SPACs that have been launched, many of them have been very successful, and we've seen significant upside in the price. Are we just seeing something of an initial difficulty starting, and is the SPAC market beginning to mature?
Absolutely. I believe that 2020 was definitely a key breaking point for SPACs, where essentially we are starting to see more quality companies coming in. Now, previously, the reason why the SPACs have kind of gotten a bit of a bad rap is a lot of these deals were kind of done with companies that maybe were not mature enough, or maybe were not at the stage where they should have been gone public, essentially. But now we've seen a big change in that with specific SPAC IPOs that actually are taken to market good quality, well-run companies that are being essentially taken to market by the specific SPAC sponsors. And you have
Give me a few examples. Give me an example of a good SPAC.
So at the moment, I believe the exemplar SPAC is probably the largest one in the market at the moment, which is this Pershing Square Tontine SPAC run by Bill Ackman. And as you will know, Bill Ackman is the CEO and founder of Pershing Square Capital Management, which is a fund management company that has a fantastic track record with a few blimps. But I mean, they have done phenomenally well over its last it's a 13, 14-year track record. Now, if you take a manager like that knows how to manage money, has the best interest of its investors at heart, you would more easily be willing to give your money to a manager like that to essentially take a company public through a SPAC vehicle. Now, the Pershing Square Tontine SPAC is seeking to find a great company that has essentially a moat around it. It's free cash flow generative, high barriers of entry, and the SPAC itself, has $4 billion in it, which actually, for better or for worse, narrows the universe of private companies they can go after, considering the fact that they are looking to buy a minority stake in a large private company, which I believe, is probably a good thing, considering the fact that it will lead the SPAC to probably go and invest into a company that is already at a good maturity level within the private market.
Okay, now that to me makes perfect sense. You find someone who has good investment experience, who has a clear understanding of what's going to make a company long-term successful, that's where he goes for. Give me an example of a bad SPAC.
A bad SPAC. There's a few in that respect.
Well,
Now,
okay, let's not use the names of the guilty, but give me an example of the kind of things that characterize bad SPACs.
Characterize. I think that's a yes. I think that's a better way to put it. Now, I believe with a lot of these, as we know, the EV market has been an incredibly blooming one during the, since 2019 to now, because of kind of like the uproar that Tesla is caused in the EV space. Now, you are finding a lot of EV related company and EV car companies that are going public through SPAC. And I think, most of the listeners will have an idea of which I'm referring to, where maybe the commercial operations of these companies are quite not there yet, where the business plans of these companies are actually not being fully formed yet, where they probably don't even have revenues coming in, where I believe SPACs of that type present a considerable risk to investors, especially if they are getting involved in these companies too early on.
You see, that to me makes perfect sense, because we all know that all these new electric vehicle companies are coming in and they're all promising that they are going to be the one that succeeds, and that they are all going to sell 5 million cars by 2030, at which stage the global market for EVs will be 25 million cars. They ain't all going to succeed. So that's a great example of a market where there is not barriers to entry, where there is enormous competition, and basically you fail all these tests that you were talking about with Ackman's tontine. Okay, look, one of the areas that fascinates me for the last couple of years has been the Japanese entrepreneur Masayoshi Son and SoftBank. And recently he talked about how SoftBank's Vision Fund, which has been investing in all these new companies, mainly tech companies, but also fintechs as well, is now set to be laying golden eggs, which he's either going to launch as IPOs or continue to nurture internally. It makes me wonder if he'd be better to issue them as self-led SPACs, because SPACs, of course, attract considerable fees for the sponsors. Now, one of the issues I'm thinking about here is one of the investments that Masayoshi Son is most famous for is WeWork, which of course exploded dramatically, and I'd like to say predicted by me for a year ahead of it, exploded dramatically at the end of 2019 when it all went badly wrong. But otherwise, there is a host of very good IPOs coming out of some of the companies that SoftBank has invested in. Should he be launching them as IPOs or as SPACs? What's the difference?
Yeah. Now that's a difficult question, because as we all know, Masayoshi Son is he's a big risk taker, and some of his bets have paid off and others haven't. Now, the process of taking some of the companies under their portfolios public through IPO or SPAC, I think, really depends on the type of company that we're talking about. I mean, Masayoshi Son has some great quality companies under their portfolio, the likes of ARM and Greensill, and ARM might actually not go public; it might just be bought out by Nvidia, as there's talks going on at the moment. Now, I believe that SoftBank at the moment has the SVF Acquisition Corporation set up, which is a SPAC. But from my understanding through Bloomberg, the SPAC won't be taking public any of the existing companies that the Vision Fund is involved in. So that leads me to believe that probably the companies that they have under their portfolios at the moment probably will go more towards the IPO route. Now, I won't rule out that they might take some of these companies public through the SPAC route. As we know Masayoshi Son is not short of surprises, as he's proved to us in the past. But I believe that there's a strong possibility for it, especially if it's especially if if SoftBank or the Vision Fund finds an advantage of going the SPAC route, which many companies do, by the way, or just going the IPO route. And I believe it's hard to tell at the moment, but I would not discount that.
Okay. Moving on, let's maybe talk about what the future of the SPAC market's going to look like. We seem to have seen some growing pains with SPACs that haven't worked out. We've seen a number of SPACs that performed very strongly in the initial post-launch stage, but then begin to struggle in the way that we've always seen with tech companies once the froth sort of evaporates. But what have we got to look forward to? Because one of the stories I love is that, for months, people have been contemplating a SPAC of Bloomberg. I mean, that would be, because everyone's for years said, wow, Bloomberg was to come to market, the dominant global media player. What would that be worth? I mean, would that make sense for Bloomberg to come to market as a SPAC, even if Mike Bloomberg was thinking of divesting?
Yeah, I mean, there's definitely been a lot of rumors around that. I mean, there's been rumors that the Tontine SPAC might be trying to do that. Now, you see, a company the size of Bloomberg has options. They can easily go an IPO through a traditional SPAC routes.
Well, they could
Traditional
launch
IPO routes
themselves, couldn't
for
they?
themselves, yeah, because they have the resources to do that, just
And they're
like
well enough
Palantir.
known to be able to do it.
Exactly.
Everyone in
And
financial markets has heard of Bloomberg.
exactly. And I mean, with companies like Palantir did it, right? Because they essentially, the whole burden of the IPO process gets passed on from the banks to the company itself. Now, if you have a company the size of Bloomberg with a balance sheet that Bloomberg does and has a robust team in its legal department and in its finance department, they can probably take on that type of work. Now, so they are, they're in a very good position to do this, to have the choice to do whatever they want. Now, for the future of SPACs, I think it's actually very bright. Now, the market loves optionality, Bill. If you can choose to go public in 3 different ways rather than one, I think everybody wants to have optionality. Now, take it like this, Bill. In 2020, there was 248 SPACs that raised a total of $83 billion, whilst the IPO market and your traditional IPO process essentially raised $78 billion for 218 companies. Now, so far in 2021, there has been more SPACs, according to SPAC Insider, than in 2019. I believe in 2019 there was 59 SPACs. So far this year, we're in February, and there's already been 144 SPAC launches.
Wow.
And you can see that the trajectory is so ever increasing. Now, the 248 SPACs that were launched in 2020, I think that the market in 2021 is going to beat that, because we already have 144, with the average IPO size being around $307 million. Now, so I believe that the SPAC market right now, SPACs have existed for a very long time, but people are starting to pay key attention to this now, and there will be probably some regulation coming in to essentially sharpen the rough edges around the IPO, around the SPAC process, and that will probably happen. I don't know exactly what that will look like today, but regulators will certainly start stepping in at some point. But I don't think it's going away. I don't think it's going anywhere. It's going to be the preferred route for many companies down the line, I believe so. And I can't see them, getting any more expensive. Actually, I think they're going to get cheaper because the market is going to get so competitive. And, we might even end up in a situation where it's a bit like private equity, where, there will be some really good deals out there and you have multiple SPACs, following the same deals. So I think there's definitely a lot to be excited about in the coming years.
Okay, let's try and draw a few conclusions about the SPAC market. I'm wearing my old market dog hat here. I've been around a long time, and I've seen massive financial innovation over the last 36 years. Wow, that long. There is massive innovation, and every time there are market problems, you blame the new things. it was derivatives, it was securitization, it was, you name it, there's always something to blame. And it does strike me that SPACs are going to be in the frame if the current market froth starts to weaken. People are going to say, oh, so much money that flowed into these SPACs because everyone thought the market can only ever go one way, which is ever upwards. And SPACs are yet another illustration of how frothy and speculative markets got. But if we actually strip them down to their bare bones, they provide a very effective way for companies to come to market. If they are supported by good sponsors who understand how it works, they are more likely to succeed. And as a way of investing in new companies and new technologies, they are certainly worth looking at in the same way as IPOs. So although they might be getting a bit of negativity, and you're going to see headlines in the Financial Times and elsewhere warning about them, this is another example where investors should be approaching with an open and pragmatic mind, eyes wide open, to look at, do they meet tests of being a good company? And if so, is it going to make money when it comes to market as a SPAC? Any further points on that, Benny?
Yeah, I fully agree with all the points that you made, Bill. And I believe that, as I mentioned before, the market loves optionality. And if this is another way for companies to decide how they want to go public, I think it kind of, further democratizes that whole process. And there's much more, there's much more value in that than, there's more positive sides to that than negative sides to that. And I think, again, as I mentioned before, regulation will come in that will kind of stabilize the SPAC market and essentially, sharpen those rough edges that will protect investors. But we will essentially, keep seeing this, the popularity of SPAC definitely go in an upward trajectory for sure.
Excellent. You can find out far more about what we're thinking about SPAC by keeping an eye on the Shard websites, and also in my daily morning commentary, themorningporridge.com. I quite often talk about them. And the reason for that is I'm talking to smart guys like Benny who tell me what I should be thinking about markets these days. This is Bill Blain and Benny Osei from Shard Capital. Thank you very much for your attention.
Thank you.